is crypto illegal in India?
Crypto doesn't have a regulator. Like you don't have a SEBI or an RBI telling what to do and what not to do. So that is where the problem comes. So then people start to think that this is illegal.
How many new bitcoins are getting generated every day on an average?
So every day, so let's say every 10 minutes you have 3.125. So
What's the cost of, let's say the value of BTC right now is
It's
100K.
Yeah.
So what's the cost of mining one BTC?
It depends. In some cities it's coming around 80,000. Some cities it's in fact goes
$18,000.
up. Yeah. Because electricity is relatively costlier.
When did you buy your first crypto and at what price?
It was BTC I bought in 2014.
Oh my, okay, very early.
I think price was somewhere around $200.
What's the annual return on an average that Bitcoin has given for the last 5 years?
It's around 50%.
But tell me one thing, once this entire 21 million is exhausted, then what?
So this would be somewhere in 2140. So we are still, like 125, 115 years away from that happening.
Is it?
Yeah.
Okay.
Yeah.
How do you guys make money?
We do have management fees. We have a management fee structure.
How much is that?
So we have two offerings. One is the index offering, which tracks Bloomberg's crypto index. For that, there's a 1.5% annual management fee, and there is just pure Bitcoin play.
Hello guys, welcome to another episode of our podcast Tech with Sukant. And today I have Zakhil Suresh, founder and CEO of BitSave. Welcome. What should I call you? Zakhil? Zakhil, right?
Yeah.
So welcome Zakhil to our podcast today.
Thank you.
So just before this, we were talking about that you started your career, you wanted to become a chartered accountant, and you eventually ended up dropping out of it. Then you did CMT, you dropped out of that as well.
No, I didn't drop out of CMT.
You
I did go and finish it off. Yeah.
So why did you drop out?
No, I think so. This was 2017 when I had finished my articleship as well. In fact, almost 4-5 months of training for finals. That's when bull market was like the 2018 bull market was beginning. Maybe I felt so. Maybe if you take a step back, like when I read about Bitcoin for the first time in 2014, it just, not coming from a tech background, I couldn't appreciate the technology aspect of it. But one thing that struck me was it was just fast than everything else that we are used to. Of course, we didn't have the UPIs and stuffs back then, but let's say the net banking, going to the bank and doing the transaction. Global transactions were very hard those days, and it was just faster version of money.
Right.
And as we have adopted internet, and which is a faster version of like sending information.
Yes.
It just made sense. Maybe this is something that will evolve and get better adoption over time. 2015, something very interesting happened. Like there was a financial crisis in Greece. The central bank, the bond market defaulted. People are not able to withdraw their own money from ATMs. Okay. It was a huge riot and conflict. I mean, a civil unrest in Greece. And the same day I saw Bitcoin go up 20%, 30%. So I kind of started understanding if the traditional systems are failing, then people will go to a system that is not controlled by a central bank or a government, right? And again, something very interesting happened in 2016, demonetization.
Yes.
Right. And then people are talking about the fact that government money can be demonetized, its value can be, like, of course, it's not like people lost money, but the physical aspect of it, or it can lose its value, and then you have to swap it to something else, or you can manipulate it or change it.
It was very unpredictable.
Exactly.
Yeah.
Right. But then Bitcoin is very predictable, as you said. Right? It's issuance cycle, everything relates to it. I mean, I'm not talking about the price aspect of it, but from a Bitcoin perspective, what it means as a technology and the form of money. So my conviction had grown, like almost 3 years of understanding, learning, and experiences around it, right? So in 2017, when the markets were going up, I felt there is an opportunity. There was a gap to fill, as in a lot of people didn't know what it meant, but there was demand coming in, as in people wanted to learn
But
about
don't
it.
you think, from my experience, I have seen for majority of the people, crypto was just getting rich
Rich,
quick
yeah,
scheme, right? So that's
right,
what
right,
people typically started investing into it.
correct,
And most of the people, when they started investing,
yeah,
the time to make money was already gone, right? So people were, even if you look at 2018,
yeah,
19, there are a lot of people who invested, and there had been huge dips as well,
correct.
right? So people invested when Ethereum was maybe $3,000, Bitcoin was
$100
roughly
even for
right.
that matter.
Uh, Not even in 2018, I think it was roughly at around $2,000, $3,000.
It did go up. It did
Huh.
go up,
But
and
then,
then it
it
came down.
it came down.
Yeah,
So people, the adoption was not more in terms of decentralization, was
true,
not more in terms of what it actually brings to the table. It was more
true.
in terms of, it was more of
FOMO,
an asset class. You're just investing in an asset class to make more money,
correct, correct.
and people
So
lost a lot of money as well.
true that, true that. Because see, one, the industry itself was fragmented, right?
Hmm.
Like it was not a formalized industry. As in now, if you see, maybe if you remove India from picture, most of the global major economies in the world have a formal legislation in place,
Yes.
right, on how to operate, what
Hmm.
not to do. That is the biggest role of a
Yes.
regulator. Right. Not what to do in terms of the asset, but what the service providers through which the
Yes.
general public access these assets comes to. You're completely right. It started as people had that perception that this is one way to make quick money.
Hmm.
And I think it also comes from the fact that any technology in its early days would have that. I think
Hmm.
AI bubble, as we speaking right now, a lot of startups came up, and now we are seeing
I
some kind
think
of
that is a different part to it.
there's a
So,
different.
for AI, the adoption, I think we'll talk about that a little
Yeah.
later.
I'm just
So,
trying to draw
yeah,
parallels.
yeah,
Like
yeah, yeah.
dot-com bubble happened, right? Like
Yes.
initially, they were people were just buying those stocks, thinking that they would make quick money
Quick money,
out
but
of it. So
yeah.
the same kind of a stage that crypto
Hmm.
also went through, but maybe more than the more than the craze around it. Personally, what it meant was 3 years of growing conviction, and also the fact that I felt, and maybe again, if I take a step back, I always want to do something different.
Hmm.
I, as a kid, let's say in a school project for that matter, I always want to do something different from others.
So I was going through your LinkedIn, and I saw
uh,
that you started your journey as a market analyst, then you
yeah,
did business analyst,
yeah, yeah,
right? Then
yeah,
eventually ended up founding
correct,
BitSave.
correct, correct.
So yeah.
Yeah, so when in 2017, and of course that also meant that I had done 3 years of articleship for
Yeah.
CA, so I had some sense of what my career would look like.
Hmm.
So I had to visualize that route versus this route,
Hmm.
where I felt maybe here is I have some information alpha because I've spent 3 years, right? So that meant that I have more details or knowledge about the asset than 90-95% of the
Yes.
world. And I trusted in the asset itself. I knew that this would grow eventually to become something. Right? This was when the total market cap was what, maybe 25 billion. Right now we're sitting at 4 trillion. So it has grown tremendously after
Hmm.
that. Right? So maybe that conviction and the understanding of the asset helped me to take that jump.
Right.
Ki, okay, maybe let me leave behind a dream that I carried for so long, because there's a bigger purpose, like, and it's sort of aligned with my career goals to do something different, not
Yeah.
very conventional, and where I might have an advantage, in
Hmm.
terms of uh, being more aware or being more I mean, let's say even for a tech savvy person, crypto comes out still complicated because there's a lot of technical aspects that
Yes.
goes
Yes.
behind the
Yes.
scenes, right? It's not your normal stuffs. So maybe all these things which I felt can be I mean, I can
Hmm.
play to that strength, and that gave me the confidence to take that leap.
Yeah.
And yeah, I mean, it has played off, so I can't
Hmm.
really complain.
When did you buy your first crypto, and at what price?
It was BTC I bought in 2014.
Oh my. Okay. Very
I
early.
think price was somewhere around $200. That's
Okay.
my the lowest I've seen is 192 on the chart, but I didn't grab it because access was also very limited back then. You had let's say a ZPay or a Uno coin. These were the only, and there was something called local bitcoins, which was a peer, which they've shut down in the last couple of years. So, but yeah, I mean, as kids, I mean, I was still doing
Are you still holding that?
No, I'm not holding it. I'll tell you why. See, I've always built something using the resources I've had, right? Like my first business in 2017 was to help people buy and sell.
When did you exit?
I didn't exit. That's what I'm trying to tell you. I didn't exit. It was more of I am using that as my base to build.
Okay.
You got what I'm saying, right? Because I've not, so except for Coinex, I've not worked in any other companies. So Coinex worked because I loved the product, I loved the team, and I wanted to be a part of that. So for almost 1.5 years, Flowbiz is more of an extension of Coinex. So that's why I was with Flowbiz for a while. But I've not worked. So my only capital has been the small, how the small investment has grown over time, right? So when in 2017, so it could also mean diversification. Let's say buying something else in between. In 2017, we launched a small business to help people buy and sell Bitcoin. So we were using our own liquidity to facilitate those things. We were on the buy side, sell side, on exchanges when exchanges launched came up in India. So that would mean that you play around or do something with that to create more value for yourself, right? The commissions, the fees that comes along with that.
Right.
So that is what I meant. So there has never been an exit, but I've used or we like my two people that have been with me since 2014. They're still with me at BitSave as my co-founders. So we've used whatever we acquired in the early days as the base to build what we have today. Right. So, and the conviction has only grown. Like today, it's very hard to even. So there was a period where, like we had to sell to pay our own lifestyle or like fund our life, right? Because we were not employed or.
Of course,
right. So because of that, it's a very painful process when it's a scarce asset which has a potential to grow. But you have to enjoy life also, right? I mean, there's no point in holding on without. And now there are these interesting models coming where you can lend against your Bitcoin, and so you don't technically have to sell them.
It's similar to what you can basically
do with gold.
Take debt against gold, mutual funds,
fixed
deposits.
So those things are coming. So maybe once those things formalizes, it becomes our life becomes a lot more easier going forward. So yeah, that's what. And I allocate mostly to Bitcoin. Like even now, whatever savings I have. The value that I create for myself, most of it goes to like
how much is what's the annual return on an average that Bitcoin has given for the last 5 years?
It's around 50% CAGR.
Okay.
I mean, if you look at it that way.
And do you think it's still going to what's the limit?
Yeah, there's no limit. There's no limit. So it's like asking what is the limit for the value humans will create. There's no limit. There's no limit to the total wealth.
But let's say if it reaches a point, then when something big becomes so big, right? So how do you even use it? How many units you can create out of it?
Yeah, so there are two aspects here, right? Like it's the supply or the scarcity aspect of it and the value aspect of it.
Right.
So from a how much you can create point of view. So
what I'm trying to ask is, let's say it reaches $10 million for one BTC.
Per BTC, yeah.
Right. And now I have, let's say, one BTC.
Yeah.
And I have to make a purchase of, let's say, $1.
Correct.
Right. So 1 by 1 million or 2 million, right? So as number, it gets very difficult, that atomicity.
Yeah.
That
so
goes.
I feel so there are few things to unpack here, right? So if you take it one step at a time, one thing at a time. Okay, let's start with the supply. So the supply is capped at 21 million. So there will only ever be 21 million Bitcoins to ever exist. Currently, we are sitting at around 19.94, getting very close to 20 million.
So where are the other, what I mean?
It will be issued over the next one.
And who issues this?
The software itself. the software
that is what the mining process
yeah,
is.
so that you plug your machines to the software and the software itself. So there is no person or company that does it. The software
And there
is
was a
programmed.
time when mining was actually very profitable. People made a lot of money. It was
Correct.
people were maybe able to mine every week or
Correct,
two.
correct.
But now it's getting impossible.
Because there's more energy, more more competition within the
Yeah.
miners. So when something becomes more competitive, only the best people or people with
What's
more
the
resources.
cost of let's say the value of BTC right now is
It's around
100K.
yeah.
So what's the cost of mining one BTC?
It depends on every country
Still,
because
let's
say
talk
I think
about
in India
India.
it's coming around, in some cities it's coming around 80,000. Some cities it's in fact goes
$18,000.
up. Yeah, because electricity is relatively costlier. I heard.
So basically, you can still make 5x of the money.
80,000.
80,000.
I didn't mean 18,000.
$80,000.
Dollars.
Okay, $80,000.
So there's some alpha still, and there are some countries where you get it at 50,000 less.
And how predictable it is? Let's say if I invest.
It's not predictable. It's very hard because there is something called a difficulty level to it, and of course there's only one of the main advantages of Bitcoin over gold is if you deploy more resources, better technology to mine more gold, you can mine more gold. You got it right. But even if you deploy more technology to create more Bitcoin, you can't. So every 10 minutes, a certain number comes up.
For people to understand, how many new Bitcoins are getting generated every day on an average?
So every day, so let's say every 10 minutes, you have 3.125.
Okay.
So I think it comes around 450 BTC.
And it doesn't get mined in whole numbers. It gets mined in fractional.
It used to. So it started with 50 every 10 minutes, and every 4 years this number becomes half. So 50 became 25, 25 became 12.5, and 6.25. Currently it's at 3.125.
Right.
So that is how the issuance circle. So it will become more and more scarce over time.
Yes.
So
and when you say mining, so just to draw some parallels, and for people who are watching this to understand, right? So when you are mining gold, right? So you have something tangible.
Correct.
You know what you are. You're going to dig up, find some gold, process it, do whatever, right?
Correct.
In what exactly mining means in terms of cryptocurrencies?
Yeah. See, I think the term is primarily used to have that as to draw that parallel with gold, but the process is entirely different, right? So what essentially it means is in gold, if you mine, you get new gold.
Right.
So here there is a process which gets you new Bitcoin. So because of that, you're calling it mining. So just to draw parallel with the but what you essentially do is you try to solve a problem. So there is a complex mathematical problem you need to solve.
Yes.
So that is where the energy goes into. So that's called proof of work. But I don't think you should get into the technicalities of it, but it's called proof of work. So when your machines solve that problem, you get the chance to validate a transaction. As in every 10 minutes, let's say if I send you one Bitcoin, someone have to verify that I've sent you Bitcoin and my ledger to be.
And basically that verification, through that verification, every verification you're getting, you're mining a part of it.
So if whoever gets to verify it, or whoever who gets to add the next block in the blockchain,
yes,
with all those transaction data, will get the reward of new Bitcoin. So that is how it is designed. So it's basically the process of securing the value, the integrity of the blockchain.
But tell me one thing: once this entire 21 million is exhausted, then what?
So this would be somewhere in 2140. So we are still like 125, 115 years away from that happening.
Is it?
Yeah.
Okay.
Yeah. So it will slow down and the scarcity die. I mean, it basically becomes zero.
Let's say after 140
Yeah.
years.
So there are two ways for miners to two revenue sources for miners. So one is the reward, which we were talking about.
But over time, the cost of mining is also going to increase exponentially.
It will. So that's
why will people do that?
Because the because Bitcoin is valuable, right? So as long as you have an incentive to mine, which means if you deploy, let's say 50,000, if the cost for you to create one Bitcoin or mine one Bitcoin is 50,000, 60,000, but if the market value is more than that, you always have an incentive to mine because there's a margin you can make by mining instead of buying it on the open market. Right? Because essentially you have two choices to buy an asset. One is create the asset, or you buy it from somebody that holds it. Right? So here, if there is an incentive for you, because if the market is saying, okay, I'm going to pay 100K for this, but you have a way to do it at 60,000, you will do that and keep that profit with you, right? So the new rewards is one of the main ways that miners get incentivized. The other way is transaction fees. So when I send one Bitcoin to you, I will have to add a transaction fee along with that. I'm saying that I'm willing to spend whatever percentage of it, or whatever in absolute terms also, to send that money to you. So that goes as a fees to these miners or the machines that are connected. So there are these two fees structures that are in place. So to answer your question of what happens when all the Bitcoin is mined and still why should they continue?
They will have the transaction fees.
They will do it for fees, and we are potentially looking at a world which will get redenominated in Bitcoin. And it might sound very unrealistic now, but it's very much a possibility. It's like if you go to Turkey, in a cafe, you will see three price charts. One is the Turkish lira, one is the dollar, one is the euro. You got it? You will have the same burger priced in three currencies because you have three different, people using three different currencies coming there. The same way you're going to have, just like we were chatting before we started shooting, right? The PayPal or the MasterCard. So whoever, all of them, if they're integrating Bitcoin as a payment method, the Jack Dorsey, the founder of Twitter, he recently launched a bunch of things for people to spend their Bitcoin. So all that would mean that and it will increase. Talking about 15 years from here, right? So that would mean a significant amount of economic activity and transactions getting settled on Bitcoin. So there will be a significant amount of transaction fees that will come from that.
But tell me one more thing. So let's say, what about privacy? For example, right now, if I pay you 100 rupees through UPI, right? So you do not know my transactions.
Right.
But if I transfer, let's say, 1 BTC from my wallet to your wallet, right? You have entire trace of, whatever I have done. Right? So although it might, that wallet address, who doesn't know, as long as you don't know who owns this wallet, that is fine. But the moment you know who is owning this, you have their entire...
True. So I think there are two ways to look at it, right? One, you're holding itself. So when you look at it as property, like recently there was this interesting judgment from Madras High Court which said that the characteristics of crypto assets resemble the characteristics of properties. So if you have a home, everyone knows you have a home. If you send that home to somebody, everyone knows you have transferred that home to somebody, right? It could be in the government registrar or it could be somewhere stored. So that is one way to look at it. Your asset, most of your assets are not really public.
But it's not that easily accessible.
Understood. So I'm coming to that. So if you want to solve for, let's say, this privacy for your day-to-day transactions, which I understand it's significant, there are protocols built on top of Bitcoin to solve for these things. Let's say something with a privacy layer to it. There's something called Lightning Network. So that's like a UPI for Bitcoin. So if UPI is like a fast, cheap payment mechanism for Indian rupees, Lightning Network is a fast, cheap payment mechanism.
Right.
For
Either
Bitcoin.
Some abstraction layer comes on top of it.
Layer 2 solutions or like whatever comes on top of it.
Right.
So these things are already being developed. So see, what we have to understand is every technology, every asset has its own phases of adoption. Right. Like we were not using voice calls or let's say video calls or messages, voice notes on day one. We started with emails as a way to communicate with each other, and it has evolved into a lot of
But
things.
See, the thing is, there are a lot of these technologies. Pehle, earlier, in very early days, people used to write letters.
Yeah.
Right. Then it evolved to email.
Correct.
Then it evolved to instant messaging,
Yeah.
video calls, voice
Right.
calls, everything. Right. So these technologies had a very clear value proposition.
True.
Correct. Now, if we look at crypto as a currency,
Mhm.
for normal people like you and me,
Mm.
right? Maybe you are able to appreciate the value of it.
Right.
But for someone, they will never be able to appreciate. I go to a taxi driver, they will never be able to appreciate how does it matter,
Yeah.
right? But if you give them the same value,
Yeah.
ki now earlier you were just writing letters, now you can call someone
Yeah,
instantly,
yeah.
you can do video call.
Right.
Then that value proposition is extremely clear and very
Correct.
powerful.
Correct. See, again, talking about phases of adoption, right? Like before COVID, most of our parents, maybe they didn't touch a laptop, they didn't touch electronic devices, but there came a point where they had to learn about stuff, and they adapted, right? Coming to value, very interestingly, 5 days back, RBI Deputy Governor on a public forum said that crypto offers a superior technology to transact or settle value globally.
Obviously.
Right. So I'm saying domestically,
no doubt about it. Plus the control is not with one person or one entity.
Control is not with one
right?
person. It has a superior property for global transfers. So maybe we start there.
Now, if you look at forex,
Yeah.
right? So whenever that foreign transaction happens,
Yeah.
the control is either with HSBC or Citibank.
Correct. It's with the bank.
These are 2-3 banks who are
Right.
typically controlling all transactions
Right.
of all other banks.
Right. Even if you're transacting with other banks, the corresponding bank is
Right.
one
It
of them.
always go through in 99% it goes through either Citi or
Correct.
with HSBC.
Correct.
Right. So
Correct.
settlement always happens there.
And then I personally know freelancers, businesses that are accepting stable coins or things through crypto
Yes.
because it's just faster, cheaper. So just like there was a phase when maybe only we appreciated WhatsApps and like video calls and then our parents or other generation was not. But we have moved from that phase to a lot of them appreciating the asset or those technologies now, right? So maybe here we are in that phase now. See, you can't just expect the technology to do the job. The people should also adapt, as in the entrepreneurs or the companies should create these products for mass adoption, right?
Yes.
So if WhatsApp didn't exist, we wouldn't be introduced to direct messaging.
Obviously,
we would
correct.
still send
So basically,
SMS.
I think we need to create an abstraction layer on top
Correct.
of it, so it can make.
It could be that
Yes.
layer. It could be a product layer, for example,
Plus-
something that we do.
Yeah.
Simplify the access, right? Like it's very hard to, if a lot of people find it hard to allocate the asset itself, then the way to solve it is to simplify that process.
Yes, but see, there is also a dark side with crypto. Money laundering, it has become go-to solution for money laundering as well.
I don't particularly agree with that because
it's invisible.
It's not invisible, right? We were discussing about privacy like 5 minutes back.
But as long as, like I said, as long as nobody knows.
Yeah, but now most
I create a let's say very simple example. Let's say I have to bring in $1 million from
Correct.
US to India.
Yeah.
And I want to avoid all the taxes and everything.
Yeah.
Right. So I'll create a new wallet. That person makes a transaction. He transfers me that money. I transfer it to someone else, and I get the cash. That money is not at all accounted for.
So now, yeah, I mean, you can essentially go to Dubai, collect money, and come back, right? You actually don't need crypto to do that. You can essentially do with cash the same thing. The risk of doing it with crypto is that now the other person has transacted in crypto to you. So at some point, there was a banking trail or some trail which you cannot erase at all. It will always be there. If I give you cash and we both leave this room, it's over. That trace is not there. But if I give you Bitcoin, something is always there.
But it is happening, left, right, and center.
I don't see that happening, honestly, because most of the money laundering report, what comes out globally, it has still something to do with US dollar. Most of the transactions are still done using hard cash. I don't know about other states, but we keep hearing in Kerala of gold smugglers being caught at the airport, right? So if something is of value and use, these people will use it. Like it's just like every terrorist on this planet uses internet. They also drink water. They also breathe the same air. So if something is useful and for their existence, they're going to use it. So it doesn't define the asset, right? So what can we do, or what can governments do, or what can countries do?
No, but anonymity actually just makes it easier, because
it makes it harder. So there are proper reports of, so now though we have enough let's say checks and balances in place to check who was doing what. For example, let me tell you this way. On an Indian exchange or Indian broker platform, if you're receiving money from somebody else, you have to submit the proof of where is the money from, what is it for. If they feel there's something illicit, they will not give you the money. Got it. So of course, the argument can be, why can't I do it myself, like through a private wallet? Still, at some point, to cash it out or to use it somewhere, you will leave a trace. And the fact is, if you're big enough, or if the chunk of this transaction is big enough, there are people. So most of the governments have now started deploying technologies, with the help of startups from the industry, to identify these kind of illicit transactions. The latest report shows that I think less than 1 or 2% of the entire Bitcoin transactions are used for illicit activities. So it has gone down significantly, because you have n number of cases where people got arrested. Eventually, it could happen 5 years later, but you leave the trace. You are leaving a trace there which you cannot erase. And as someone doing something shady or illegal, I don't think you want to leave a trace. Like as part of your plan, your basic thing would be, how do I do this without leaving a trace?
Right.
So that percentage has gone down significantly. And like with more and more legitimate ways for people to access. For example, let's say 5 years back, you didn't have so many globally regulated platforms to access the asset. So it's like, I don't remember the last time I was someone using torrent. Right, because we were all using torrent at some point, even though it had its gray zone. But now you have the Netflix and Hotstars of the world giving you access to the same content in a legitimate way. So even though you're paying something for it, you feel more safe and secure accessing the content through that, instead of going through a Telegram or a torrent. Right. So it's the same thing. If you legitimize and form, this is one of the reasons why we as an industry has been pushing for regulation for so long, right? If you don't have enough regulations in a country, there's a high chance of people using it through other ways. That would also mean that you get introduced to other ways of dealing in stuff.
Why is it that the government are quite apprehensive of adopting this or making it their primary kind of currency or whatever? Why don't they want to regulate? Why don't they want to regulate it? Is it even regulate? Can this be regulated?
So asset cannot be regulated. It's just like saying you can't regulate gold, right? Gold is an asset outside government's control, so you can't regulate gold. What you can essentially regulate is service providers.
No, but also, let's say in terms of gold, government knows, right, what's the overall supply in India. Government knows what's the overall supply in India, right? So then,
okay. I mean, I don't know, as in like there could be gold that is stored somewhere which you don't know, right? Like how do you know how much of gold people hold in their home? Right? I don't know. We might have an approximate.
I'll tell you what. Whatever mining is done, however, how many gold is being imported formally, exactly, formally. That is something that, and that's why people smuggle gold and do all that stuff, right? But with crypto, you do not know. You have that overall supply globally, and until and unless this all countries come together, it cannot be regulated. How will you reconcile this?
You can basically
see, government are able to identify that overall there is so much cash, fake cash that is circulating in the economy. Because they're not able to reconcile it. Whatever is extra is something which is informal. Right? But in this case, you never know what is actually right, what is wrong, and how will you reconcile this?
No, so see, one of the ways to do it is to formalize a lot of channels, right? For example, once you bring all the service providers under a common umbrella with proper reporting in place. For example, something that we do is we don't just say this is what we hold on our client's behalf. We show you all the wallets. So if I say I have 1 million today, you can go and verify that I have 1 million. So this is not a form, it's not a standard thing in the industry. You got what I'm saying, right? Like, so if we formalize this, if there are rules in place to say that whoever is operating in India should publish these things and give formal statements, there can be data that we can have. Another thing interesting that you mentioned is the fact that government has full visibility over the amount of gold that is coming into the system. We don't have that for crypto now, right? Like, because if how much of a liquidity is being sourced from foreign platforms, there's no way to track it.
Right.
We don't have a formalized way of doing it.
Right. There has to be a protocol that is
Exactly.
accepted globally.
And maybe I think maybe on one side you have an asset which has evolved over time. So it's very maybe unrelated, but a lot of people don't know this, that I think in 1969 India banned holding of gold. Like, Indians were not allowed to. There was some amount of jewelry that were allowed, but gold bars and gold bullions, government, I think treasury ran out of funds, and government banned it and said ki whatever you have to give to the government, or if you are keeping at home, they'll come and confiscate it from you. So this happened in India, right? And then I think in 1990s is when we kind of recovered, and whatever, things improved after that. So maybe it was not as formalized as this back then. Like, you had to basically go and let's say figure out if someone has gold or whatever, right? But now, because of the formalization of the structure, let me give you an example. If someone watching this, if they want to buy Bitcoin, they don't know, like, they may have n number of options, and some of them may not be very formalized or very standard process. And someone might offer, if I do it this way, there is a discount. I'm just giving you an example, right? But for gold, you're not confused. You go to, the SEBI says that there are gold ETF, there are gold bonds. So there is a formal sector in place. So because of that, the majority of people would access the asset the right way.
Yeah.
Right. But because of the fact that we don't have them in crypto, people are exposed to n number of things, which will include not so right things as well. So I think formalizing the industry will help.
I think the adoption can happen, but I'll tell you, according to me, when that adoption will happen, every country will still use their local currencies, right?
True.
See, right now, the economy of the country is typically either against USD
Correct.
or against gold, the amount of gold they are holding,
Correct.
right, or the amount of USD they are holding.
Correct.
Now, if we remove USD and gold and replace that with, let's say, BTC, right? So let's say India government is holding X amount of BTC,
Correct.
and that against that X amount of BTC, they are
Right.
issuing those currencies.
Correct.
Right? So I think that's actually
That
a
is
better,
that is the possibility,
and that is actually a better way of doing it, and then you can regulate it very well, because you have limited supply globally, right? You have 21 million Bitcoins. Everybody has certain amount of BTCs.
If the government can still print money, irrespective of the reserve that they have, you're still going to have inflation in the economy, right? And essentially that is the problem that Bitcoin is trying to solve, right? Because today you have high inflation in the economy, and it's like a silent tax. If you're making 5% on an FD, but your cost of everything that you buy is going up 10% a year, you're not making 5%, you're losing 5% effectively. Right.
Right. But see, the thing is, even now there are a lot of governments, countries, they're issuing their own cryptocurrency.
It's not cryptocurrency, it's central bank digital currency, CBDCs.
They're launching their cryptos as well. Digital currency is just a digital version of whatever was already there.
You mean to say stable coins?
Stable coins, yeah.
Okay. They're mostly private. They're not launched by the central bank.
Okay.
Interestingly, just to add to the central bank holding point, Czech Republic central bank in fact bought 1 million worth of Bitcoin as a test transaction last week. So they're testing it as a reserve. right? Like the Luxembourg sovereign wealth fund have allocated 1% of the total funds into Bitcoin. US has already launched a Bitcoin treasury, like as a strategic reserve, and they plan to acquire more of it in a budget neutral way. You're already seeing a glimpse of these things. Abu Dhabi sovereign wealth fund bought it earlier this year. So it's already happening, and a lot of companies have started allocating their treasury funds to Bitcoin instead of putting it in cash, which may not be yielding them anything. They've started allocating a few percentage of their treasury funds to Bitcoin. Right? So I'm like, we're just 16-year-old. The asset is only 16-year-old, and we've never seen something getting adopted so much in 16 years. Gold is at $27 trillion asset after 5,000 years. Bitcoin is at 2 trillion in just 16 years. So look at the rate of
gold has always been the standard, for so many years.
Yeah, but I'm saying it's 5,000 years. That's a long time. And a lot of people don't know this, as in gold's price started stabilizing only from 2004 after the launch of ETFs. So before that, gold used to drop 60% in, let's say, 2 years, 3 years, 4 year time. If I show you the chart of gold from 1970s, you will think it's a Bitcoin chart. It's that volatile. It goes up and down that much. Right. So the asset got stabilized. Asset has been accepted in the economy because we used to go for wars for gold, right? Like long back. So it was something of value. Why was it of value? Because you can't create more of it easily. It was very hard to create new gold, and that is why it protects our
There
wealth.
has to be anything that has a limited supply.
Correct. Right? And a use case.
And they have a use case, right?
Because limited supply doesn't, if I say I'm not going to make more of this water, it's not going to have any value because it doesn't have a use case to it. But Bitcoin having a use case, which is essentially an ability to store your wealth in a digital format without the risk of inflation.
See, I was reading an opinion article in one of the newspapers a couple of weeks back, where there has been, it was mentioned that a lot of economies are now holding and acquiring more and more gold. And eventually we are leading in a direction where what happened in 1969, right? Where government will not let you hold gold. They will probably issue you something, those bonds, stuff like that against that gold, but you won't be able to go out, purchase gold in its current form.
True. I think something to keep in mind, like to be mindful of when central banks are buying more gold, is you need to understand that they're selling their own currency against gold, right? So it's like an insurance.
Yes.
Because in case your currency, you rightly said that most of the currencies are backed by dollar. Dollar is backed by nothing. There's nothing underlying to dollar. It's just the promise of the government.
Yes.
Right? The trust in the US
and that
government.
Promise, and see, ideally, even that promise comes from something, So ideally, even the currencies are issued against the gold holding you have, or a USD holding that you have.
So US is not doing it.
See, it's supposed to be that way.
It is supposed to be,
but they don't do it.
They don't do it,
right? So exactly. I have gold worth $100, and I'm issuing currency worth $1,000.
Whatever,
right? So you can do, but that doesn't,
it doesn't make sense.
It doesn't make
sense. It doesn't make sense. So we need a solution to that.
It's a bubble. It's a delusion.
Yeah, I mean, and see, I'll tell you one stat. The strongest currency in the last 100 years has been dollar.
Yeah.
And that dollar has lost 99% of its purchasing power. That's the strongest.
Yes, yes.
Strongest
and
one
we are seeing countries opting out of it.
Correct.
Right? There have been so many coalitions where countries are now, kind of transacting with their currency, with gold. They are doing that barter stuff as well.
Yeah.
Right? You give me oil, I'll give you wheat, something like
that. Yeah. Countries are trying to move away from the dollar, and if most of the currencies in the world are backed by dollar, and if demand for dollar is slowing down,
right? And the reason why dollar became so strong, because they were able to push their agenda.
Correct.
Of
there was an economic power that US and the military power,
and they had the leverage.
Correct.
Either we'll transact in USD or we will not.
But most people have started realizing it. They're just printing money. right? They're just printing money left, right, center. US debt is at all-time high. I think the debt to GDP ratio is at 120% right now, and there has never been any economy except for Japan. If that number hits 130%, it has always led to civil unrest and domestic violence, right? So that's where we are looking at in a potential. I don't know. So, for example, US debt, all the three credit rating agencies have devalued, or let's say lowered the rating for US Treasury bills, right? So what does that mean? Tomorrow, if borrowing money becomes hard for them, they're gonna print more. They're gonna print more. What does that mean? The value of dollars goes down, and if every currency in this planet is backed by dollars, that would also impact every other currency, right?
I think we can look at history. You can look at so many African countries, Southeast Asian countries. Whoever has printed currency, right? So
fiat has always inflated. It's just a matter of time, because if you understand that system, you will understand the fact that this cannot go on forever. You can extend it by whatever borrowing, lending, and
either you have to step back and fix it, or otherwise you are just
I mean, and there's this interesting thing. I think in Germany, World War II, people used to burn currency for heat, because exchanging it for wood meant less heat. Like the heat generated by the wood would be lesser compared to the heat generated by the notes itself. So we've seen all that. It's just that maybe we have a recency bias. So for the last whatever number of years, we've been fortunate to live in a fairly stable economy, barring, let's say, a financial crisis of 2008 and COVID to some extent, right? But this year, if you look at what's happening, like lots of wars. Like other countries are fighting, whether it's the actual wars or the tariff wars or the trade wars or whatever you name it. Very interestingly, more people are opting for pets than kids. That data also, this whole narrative of if you want to enjoy your life, if you want a safe retirement, you should not have kids. This narrative is building on one side, right? And that has all got to do with your money losing value, because on one side you're working hard, you're accumulating wealth for your family, and on one side, if
but the value of that wealth is decreasing with every passing day and year.
Correct. Like, let's say if you look at the supply of, if you look at the total supply of Indian rupees, it's going up 10% every year, like the M2 supply, right? So and a lot of people don't realize it, even after so much of awareness and education.
People don't care. I think it has to. It has
I mean,
the government.
It has to happen. I mean,
see. I think you should not even expect the normal people to care about it, right? They have lot of their problems, their struggles, their adversity to look for. So, and everybody is looking for short term. See, to look at a bigger picture, if you don't have your dinner planned for today, right? You can't say what will happen in the next week. What will I eat after, in next week?
Yeah, I mean, and essentially post-COVID, especially, I feel, like a lot of people are forced to learn about markets, forced to invest and take risks, which potentially may not be right for them, right? Because a lot of people have got into futures, options, and lost money in trading. And
everybody just want to.
Whenever I still feel sad when, like one of the reasons why scammers are able to take so much of money from public is because on one side you have the need to make more money, right?
And look at this now. Even in the crypto stuff, there have been so many startups they came, right? Everybody was doing that ICO stuff.
Correct.
Right? And we know that it's a Ponzi scheme.
Exactly. Right? Like we were offered.
There were so many coins at certain point of time.
True.
Right? And they create all those white papers, try to bring a value out of it. And most of them, 90% of
99,
them,
forget about.
They would disappear after ICO.
Yeah. Like we were told, if you launch a token in six months, we'll fund you. We had an offer. We said, like, what do I do with the token? Who will even buy the token? As a platform, we don't need a token.
And what are you doing with this? See, the overall purpose of decentralization, if you have so many tokens,
correct.
What's the point?
There's ultimately, there should be a value that every token or coin or digital, whatever we call it, it needs to have a value, right?
Yes.
Like, it's just like, you can tell me more about what's happening in AI right now, but it was just like the question of do I need blockchain to solve for this, the answer was always no for most cases.
See, and I'll tell you one more thing. See, the problem with blockchain is, and if you compare blockchain and AI had a very clear use case. See, AI, this LLM, ChatGPT came 2 years back.
Correct.
It is spread like a wildfire, right?
Correct.
But if you look at blockchain, it didn't.
It didn't.
Because it didn't have a use case at bottom of the pyramid.
Correct.
It might have a use case at top of the pyramid.
Correct.
But use case and that adoption happens at bottom, not at top.
And also I think for AI, you don't need anyone's permission as such to download a ChatGPT and start using it for work. But for when it has something to do with value and money, people can't adopt it, or the institutions cannot adopt it without proper regulations.
Plus, see, there is no direct value, right?
So, for example,
I do not care if the transaction is happening on PhonePe or a transaction is happening on blockchain or
that is specific to, let's say payments. But let's say a lot of governments, especially in India, not a lot, but some of them are right now looking at shifting land records to blockchain because it's so cumbersome. It's hard to. There's a lot of disputes. I think the largest bucket of disputes in India are for land, right? Because someone buys land in North Bangalore, but after a few months you see somebody else is living
exactly
there.
That's what I'm trying to say. It has use cases, but those use cases do not have a direct value.
Correct.
For people, at the bottom.
True.
That use case is typically for regulators, government bodies, right? So maybe institutions, it could be
global
private,
payments,
public.
which
exactly right.
Maybe 1% of Indians use, right? So and maybe it's also specific to every country, right? Like for example, we're talking about UPI and domestic payments. Not every country has UPI.
Yes.
Right. So maybe if you go to a remote village in Africa where they don't even trust their own central bank or governments, maybe Bitcoin payments make sense for them.
Yes.
Right. But in a Bangalore cafe, it may not make sense. Or Noida, it may not make sense. Right. So
in fact, it's quite cumbersome as well.
Correct.
I would not want to accept payment in crypto. I have to convert into fiat. I'll have to pay those conversion charges as well.
Exactly.
Right. Plus taxation in India is like 30% flat.
Storage and everything else that comes along. So again, it's all subjective, and it's very different in every country. But I agree with you on the fact that 99.99% of stuffs are going to zero, and it's also one of the reasons why we are a Bitcoin first brand. Every client on our platform has an allocation to Bitcoin. We make sure that it's designed in a way that you have allocation to Bitcoin, which is not the case otherwise, right? Because people chase these things which doesn't make sense, right? So that's where things stand in terms of adoption and value, right? And,
makes sense, right? How about there are certain countries like Japan, there has been zero inflation for the last 20-30 years.
I don't think that's true for Japan. I think the only country without inflation has been Switzerland. That's my understanding.
Japan as well.
Japan prints currency pretty much because their central bank was absorbing.
I'm not aware of that, if they're printing currency or not. What I know is, that there have been, the inflation has been quite low. And not just Japan, if you look for European countries as well.
It could also be because of technology advancements, right? Like on one side, if you're printing money, but on the other side, if the cost of actually creating something, producing something is going down, that can. So let's say you have better technology to create food, create for agriculture and every other service out there. For example, one of the things what AI is doing is kind of reducing the cost of producing services, right?
Yes.
So even though you are printing more, but economic activity or economic productivity is also matching that growth or that inflation in money supply, maybe the end user or the end customer may not have an impact of that, right? So this could be what we are seeing. But let's say if you look at US is printing, inflation has been on the rise. Money printing has been on the rise. You have countries like Turkey with 70%, 60% inflation, Brazil 90%, Argentina for that matter, right? So it's very common, like we were discussing initially. It is what it is, as in governments. It's very hard. So I'm pretty sure you saw this, like Elon Musk after his period at the government, he came out and he was speaking at a conference where he said the government is unfixable, right? Because after a point where you have a certain expense attached to running something, you can't go back, right? Unless and until that efficiency is there, like ingrained into the system itself, or maybe maybe not every government job comes at a risk of you being laid off if you don't work well. So what does that mean? If the government wants 200 crores to run, but only makes 1,000 crores, or let's say 100 or 150 crores from revenue, you have to print or borrow the remaining 50 crores. There's no other way. And as long as you can borrow, you will borrow, but after a point you will not be able to borrow, then you have to print. That's the only way you can survive, right? So which puts pressure on the people of that country, and we've seen that, I think per person debt in US is some $10,000 or something. In India, it's 2 lakhs or something. A newborn has a debt of 2.5 lakhs, right? Which we don't really discuss. When we actually hear that government is in debt, we don't really feel it's us.
It's right? us who are in debt.
It's a people of, because government keeps changing every 5 years. Essentially, the people who are in debt, right? It's like a good example that I always say is when you are in a society, like you have a association, right? You have a residents association taking care of it, and you elect. The reason why you pay the maintenance fee is basically to fund or take care of that society itself. Essentially the same thing that we do as a government.
So whatever tax we are paying, we are just paying, that as a maintenance fee that we are paying, right?
And but the difference is governments can print if they want. A residents association or owners association cannot do that. So because of that, it impacts everyone. It's not like someone is immune to it, right? It impacts everyone. So we need to understand that it's our debt. It's when the country is in debt, we are in debt.
No, absolutely, right? Absolutely. Yeah. So what are you guys doing at BitSave?
So BitSave, we realized post-COVID that access to the asset has become very complicated. So most of the platforms started listing a number of random things, and futures came, options came, and like binary trading or whatever, staking, and it just became way too complicated. So most of the people that we were interacting with, this could be, let's say, your lawyers, doctors, and working professionals and HNIs who don't have the time to figure this out. As in, you don't want to learn what the difference between a Bitcoin and Ethereum is, but you're bullish on the asset, or you want to take a position on the asset. So our idea was, how do we solve for them, right? Because
so that capital created more of a mutual fund kind of a stuff.
Correct. Okay. So that capital was not entering into the asset itself. The capital was staying outside the bubble that we had created, or the circle that we were building for. So as a team that had experience, have built stuffs in this space, we wanted to solve for that, because in fact what it meant was it was affecting the asset itself. Like I said, the capital was not coming in, or they end up allocating to the wrong stuff that we were discussing.
And how is it working out for you guys? How is the adoption so far? What's the return that people are getting?
We are a passive product, which means we're not trying to beat the market. We are trying to go with the market. So it's mostly, let's say, we have an index product, just like an Nifty 50 for crypto, or we have just Bitcoin that people can allocate to. So return has been, let's say, 40%, whatever the market has given over the last 2.5 years, right? So that's been, and we don't promise anything. Our promise is not the returns, but our promise is mostly on the comfort side of things, the transparency side of things, the ease of your transaction, and the pain points that a typical crypto investor in India would be going through. So basically simplifying the access. So it's like a UPI moment for crypto, right? Like there were a very long time when mobile payments or mobile banking didn't take off, because we didn't have the right products for people to transact. It was not easy, but UPI came and everyone were able to do that. So that's our TG. People who find crypto exchanges, broker platforms, decentralized platforms hard,
Yeah.
So for them to come and say, I want to do an SIP of 10,000 rupees every month, so here is my 10,000 rupees. We take care of everything else: buying, selling, custody, and every taxation report and all that.
You guys are regulated by?
No, we don't have a regulator. As
Yeah.
in, it's not like us. It's not just us. Every crypto service provider in India doesn't have a regulator.
Yeah.
But we have to, let's say, register ourselves with the finance ministry. We have to follow the same KYC guidelines that any other bank or NBFC has to follow. The same RBI
So under
guidelines.
what head, let's say if I am doing an SIP of 10,000
It comes
per
under
month.
crypto.
Okay.
So crypto is crypto. In India, it is called virtual digital assets, VDA. That's a term that is used for crypto. And in your ITR, so let's say there's a 1% TDS whenever you transfer or sell. So because of that, it comes to your tax statement, your IT statement as virtual digital asset. So it is treated as a separate asset.
Got it.
Yeah, it comes under capital gains in terms of taxation, but it's not a property, it's not a mutual fund, it's not a stock, it is crypto. So that's.
And you guys are funded?
We are funded. We did an institutional round last year from Leo Capital.
Okay, how much?
We didn't disclose
Okay.
it. We didn't want that number to define us, so we didn't really put it out.
Why do you think it will define you?
No, I think there were a lot of glorification of funding
Yeah.
that happened. I don't know that if that's happening right now, but let's say post-COVID, funding was kind of seen as the success metric, right? And we feel it's just a means to an end, or
So
it's some.
you guys have achieved the product market fit now?
See, our client base is growing. Product is growing on its own. There's a huge word of mouth.
Is there an app or a website?
It's an app. We will launch a website next year, but currently it's completely app based. So because of that, we felt, let's let the client base and the actual assets that we hold define us, or let that be the number out there, instead of having the funds raised to kind of define us.
I'm also seeing a very interesting, trend in these blockchain companies, right? So most of them, almost all crypto and the blockchain companies are completely remote. Right? Versus if you look at other traditional businesses, even if some new startup is coming in, right? So all these are completely in office.
Yeah.
So why is that?
I think it's one, because your talent might be scattered. So what I mean by that is, if you want to hire to build a tech company, you will find a lot of people who fits into your criteria within your own city. Right, but in crypto, if you need a blockchain developer, if you need someone with an experience in this space, yeah. So I think it's primarily, the difficulty in finding talent in locally, right? For example, if you wanna find a normal, let's say, some Java developer or some other developer, you might have that talent pool within the same.
So saying the role and the skill set required is extremely niche.
It is niche, and then you don't have experienced people enough, maybe enough experienced people in the same place. So, for example, in our case, very different. But when we started, like four founders, we all were in four cities. Like one was in Chennai, one was in Bangalore, one was in Delhi, one was in Canada. So it didn't make sense for us to, and especially when you start, you don't want to deploy a lot of capital in terms of, right? So, and when you have the luxury of doing it, you do it. And then maybe sometimes if you realize that it's not required for you to get things done, that becomes a culture. For example, the largest crypto exchange in the world, Binance has a remote team, even though they have offices here and there, but their team is largely remote.
Yes.
Right. So because it becomes your culture, at the end of the day, it's about getting things done. Right. So sometimes it's very hard to communicate or have your team aligned on your vision when you are not together. Right. But as an organization, if you're able to achieve that and still push forward and get things done without being together,
I think if you have that clarity,
correct,
that and once you're ready, that this is how it has to be.
Correct.
Right. For instance, for you guys, there is no other option.
There is no other option.
Either you do it this way or you don't do it.
It's like, so for example, in our case, we are a little picky when it comes to hiring.
Yeah.
As in, because there is a philosophy angle of business, right? Like, because we feel one of the differentiator for us is the values with which we build the product. Right now, if you are saying that I need to hire a person for this role in the next 2 months, you will compromise on that because you have a list of people, and based on whatever other constraints you have, you're going to pick one and fill that role, right? And that would come at a cost of compromising, and there is a risk involved. Since we don't really like to take that risk, we wait. As in, we wait for the right people. And
but
maybe
don't you think it also impacts business as well? Opportunity cost as a company as
you
well.
have to. So again, it's very subjective to what your line of business is, right? For us, if a wrong hire can potentially have a negative impact on how you ship your product, the kind of language that you have when you communicate to your customers, which are very crucial to our offering. It's not an area we want to take a risk on. Or, for example, relationship manager. For us, every client gets a relationship manager, and we make sure that those are people who actually know what they're doing, have an understanding of the asset itself, and they're not just here for short term. Because recently I've heard, I read someone saying, like, how can I build a relationship with a bank when my relationship manager is changing every 6 months? Right. So for us, we've had the same people doing from day one, right? So there you have to be a little picky, choosy, because if you hire the wrong person, yes, I understand it comes at a cost of maybe not able to scale. So that is where what you are as a brand or how we want to grow as a brand becomes relevant, right? For us, we know this is a long-term game, so we don't want to optimize anything for short-term.
Got it.
Maybe not every brand can afford to do that, and then you might have to compromise on some of these aspects, right? So maybe since we are able to do it, we do it.
Right. And so let's just look at it this way. Let's say, you get a client, institutional client. They want to put in, let's say, invest $2 million.
Right.
Right. And they have a timeline. You'll have to do it by December. Now you need to make certain product changes in your product, the small changes, right? Certain changes in product.
Correct.
And you need additional people for that. Will you let go of that opportunity?
Not exactly. I think so as a team,
maybe you will compromise on
exactly
certain talent, and you'll build some checks in places, put check and balances in places.
True.
So but you will not let go of that.
I mean, this is in fact something that's happening, not really of that size, but there's another product line that we're working on specifically for HNIs or institutions and that require a different app altogether, right? And of course that meant that you had to prioritize it and allocate resources to that. That also meant we are in fact launching something else next year, for which there is a website that is being parallelly made, right? So now what that means is, maybe is there a piece that you can outsource at this point to get it done, so that your overall and your main talent and focus goes into what is priority right now. So which is the new app that I was talking about, right? So because of that, it's about planning. Of course, it comes at those adjustments that you have to make to make sure that what you prioritize. And maybe one of the advantages as an early stage startup is that you can afford to prioritize. You can pick, right? See, the biggest issue, and I think it's amplified in crypto, that you have n number of opportunities. Like it's a very, very distractive place to be in. Every day you wake up and see somebody raising so much million, somebody making.
Those are very, those are very vanity opportunities, right? Those opportunities we are creating in our head. We do this, we might achieve this, versus some very tangible opportunity which is there on the table.
But my point is, it's very hard to stay committed. Like I've seen that,
and I think it's not just for crypto. It's for actually, if you pick
Yeah.
any business, right? Any founder, they are always, whatever they are doing anything in fintech, they are doing anything in e-commerce, quick commerce, right? Founders are typically very creative people, right? Whoever is doing a little bit good, right? So they are very creative and they have hundreds of ideas. We can do this, we can do that. This is how you can improvise things. You can add this feature, you can do that. You can, potentially, you're in 5 cities, you can expand to another 20 cities, right? But then I think as an entrepreneur, like you rightly said, prioritizing, and while it's like you are absorbing whatever you are thinking, but not acting on every thought or every idea that is coming along.
It's eventually it comes down to one thing: what you decide not to do. right? Like, because there are n number of things for you to do. You need
You
to
can't keep
identify
doing
what
everything.
is working for you, what is your strength. It's always better if you build something where you have a competitive advantage, because everyone is building. And for example, I mean, I'm just coming back to what we were discussing, right? Like, so maybe here some of these AI tools help.
Yeah.
Instead of having a designer or a product developer, you you can get 80% of the work done by AI, right?
That is true.
With the same quality, and then maybe you just do the final, like, so I think that is where you leverage technology to build products, right? So that's exactly what we are doing. Like, what can we outsource? We do that.
Yeah.
And also, some startups might be constrained by capital. You may not be able to hire somebody just so that you have to push something for the next 2 months, because after that maybe there's no need for the person.
Yes.
You won't have the capital to allocate for long term for that person, right? So
And it's not fair to the person as well.
exactly.
Right.
So you have to. That's why planning and maybe the fact that you can move fast as a team when you're young. That's one advantage, right? You don't need to wait for approvals from 10 different people or 10 different stages. You can make the decision and move on. So that's where your
Right.
judgment, the team's, the quality of gut feeling. That's what I say. Instead of experience. Like, you're as when you've done this over and over so many years, you have kept doing it. Your quality of gut feeling starts improving.
Yes.
So because of that, maybe you find you arrive at those judgments very easily. And then also, I feel at the end of the day, it's a risk to reward game, right? You have to play your games
Absolutely.
very
Yes.
carefully. You should not do anything that can potentially like destroy you or kill you as a business. So whenever you take a risk, you need to know what your maximum downside is going to be, and how can you handle even the worst case scenario. So these are the things that we do. And then maybe there's a very deep connection to the purpose for which we exist within the team itself. Even the people that we've hired, they are deeply connected to what we stand for as a business. So because of that, maybe like some people are, they take the ownership and say, we will get it done within
Yes.
whatever. So these are things that we are fortunate as a brand, as a company, going forward. But I think primarily it comes down to your judgments on a day-to-day basis. How
Obviously.
you want to
Correct,
manage
correct.
it. It's like, I've heard this, like MS Dhoni saying this once. Like, at the on the match day, if you start worrying about that player is injured, this player is injured, if I had this person in the team, I could have done something better. It doesn't make sense, because you don't have that. So what he thinks is, what can I do with the 11 people I have? What is the best? What is the role I can assign to each of them? And what do I expect from them? What can I ask them to do?
Yeah.
Right. So you try to focus on things within your control and try to get the best out of that. Right? And that's been largely what we've been focused on as a company as well. And it's been working. So
Yeah.
no complaints.
How big is your team right now?
For 15 of us. 15
Okay.
of us.
And is this global?
The product, you mean?
No, not
Team.
Yeah, the product as well.
Team
Product.
is largely India now.
Okay.
Largely India now. Like I said.
And how frequently do you guys meet?
We try to meet at least once in 6 months.
Okay.
In fact, like 3 months back, that's when I met a lot of people for the first time. Like, we had made some new hires, but everybody, at least once in a year, we make sure team calls we do once in a month, as in like online calls, just so that everyone is updated about what is going on, and just to align everyone's. We try to do more of one-on-ones, because that is where I think the real discussions and
the real value
happens. But bonding is also crucial. So
Correct.
once in 6 months, once in 1 year, we make sure we meet, like, in person. So yeah, the product is going global next year. So
Right now it's only in India.
we primarily focus on India. Banking rails are only built
From
for.
a tech perspective, is there anything changes when you're doing this locally versus
We
globally?
have built it that way from day one.
But what are those, what are those technical aspects that you have to look into when
No,
you're
it's largely payments is one. For example, in
Yeah.
India, you might have Indian rupees and like UPI and NEFTs and stuff. Sorry, NEFT and RTGS and stuff. But if you go to some other country where UPI is not there, how do you kind of structure it, right? Or maybe not in every country we can build a banking rail ourselves. So in that case, you might have to use third-party apps or third-party payment providers in other countries.
Yeah.
So just like a Razorpay in India, you might have to use somebody else in another country, right? So then, how do you integrate that?
So
And
doesn't Stripe, kind of take care of this globally?
so Stripe for crypto players, it's not open to a lot of countries yet. So they have it for US. They've launched it for US. But because of the restrictions, a lot of global payment providers don't work with crypto companies yet. So Stripe is not available for our jurisdictions.
So what
as
are
of
what
now.
are some of those payment gateways? Well, obviously, if you're going global,
Yeah.
you can't be having 170, 180 different providers.
Correct.
Right?
So there are these companies like MoonPay, Alchemy Pay. So these are very crypto
Okay.
brands. So what they've done is they've built these rails for different countries. So they've integrated, let's say, I think there's something similar to UPI in Thailand. So they have plugged that in. Bank transfers in UAE, and prompt pay, that's the name of the service in Thailand. And we have similar stuffs in Singapore, Indonesia, even Canada for that matter. So they have integrated all that into one. So as a platform, you just have to plug that one in. So then even with Apple Pay, Google Pay, outside India, I mean to say, you can essentially buy crypto or get started using these payment services as well within your own phone. Right, so we have the option to plug them in. So these are providers that do just this. That is their focus, to make sure that the rails are up and running, the chargebacks are being taken care of, right? So practically, it's not possible for you to be there in every country. So you have to rely on something. So for example, in India, we have done it ourselves. So what it essentially means is you have luxury of customizing it your way. How do you want it your way? The tech can be built it that way. But when you plug in a third party, that may not be the case, right? You're limited by how good their APIs are, how good their SDKs are,
Obviously, right.
how good their callbacks are.
But
right?
it's very expensive as well, right? The more integration you do, there are so many moving stuff. You need a lot of people to kind of just maintain it, manage it, right?
Correct.
Not one
Compliance.
Compliance plus one person can't have kind of expertise with all those.
True.
No, not one person can, they can't even remember everything.
Yeah. But except for payments, everything else we have built it as a global platform from day one, because we knew eventually that
compliance, taxation, etc.
Taxation, not just taxation, like the entire product, it's designed in a way where you just have to change how the person puts money from the bank account. As in, if it's India, you will have a UPI option.
So, but there is nothing even changes, right? Apart
from that, nothing changes. Right. So we have essentially built it that way. I mean to say, on
does
some
it
other
even change? Let's say, if somebody apart from payment gateway, if I am, let's say investing in India versus investing in US or investing in, let's say, some country in Africa. Apart from that payment gateway provider, is there anything else that changes?
If you are using an exchange, if you are basically using an Indian crypto exchange, most of your services will be denominated in INR, right? So you can't replicate that. You will have to replicate the local currency in a different country. So what we did is we did it in dollars from day one. So payment is basically from your local currency to dollar. So once you do that, everything is in dollars.
And tell me one more thing. Let's say, if I'm doing SIP, obviously there's a pool of crypto that I'm purchasing.
Either Bitcoin or a pool.
And who is holding that? Where does that lie?
So it depends
your
on
centralized
wallet?
Are you,
if you're asking, so essentially you have three options. Like as an investor, you have three options. One is you can do a self-custody, which is the right way of doing it. It is designed, crypto as an asset was designed to do that. You can hold it yourself without trusting or depending on a third party. That is one way to do it. Second way to do it is you can do it on an exchange. So you buy it on an exchange or a broker, you leave it with them. So they will have their own, custody services that they offer on top of that. They will have an infrastructure to store your keys and all those stuff. It more or less will be a combination of hot and cold wallets, by just to simplify, things connected to the internet, things not connected to the internet. So they will store it in that kind of a situation. So one is very secure, like doing it yourself, but it is not convenient because you have to store your stuff, you have to take care of it, you have to update it once in a while. But the other one could be very easy, because exchange you can go buy, do nothing else. That is it, right? it will be very easy, but at the same time, security is something that has been a problem historically. Like most of the exchanges have had at least one cyber security incident because of how it operates. Like if you're connected to the internet, there is a third way, which is institutional custody. Institutional custody is you have your NSDLs and CDSLs for stocks, right? Like they keep your data safe. Everyone can ask the same question of what if someone hacks into NSDL and just messes up the data? Then there's no record of who owns what, right? So it doesn't happen because there's a certain cryptographic layer to it. There's a certain bank grade security to how the systems are built. The same way, crypto also has a service where you create an ecosystem or you create a framework to store your keys.
Do we have any single registrar or a repository similar?
So custodian in India, there is only one registered custodian under Ministry of Finance, that is liminal custody. So they are in fact the custodians for CBI also, like whatever assets are confiscated by CBI, they keep it in their wallet. So what it essentially means is it's a system that is designed to, it's like a bank locker version of crypto because it's multi-layered of security. All your private keys are split into multiple pieces stored in different cities. So such a system has never been compromised, as in all these BlackRock ETFs and global ETFs, they all use this kind of an infrastructure, and on top of it, you also have an insurance coverage in place. So we use that system. So we are not, we don't provide a self-custody system. We don't provide, we are not an exchange or a broker. We are more like your, let's say we provide you a service to buy and store it in institutional custody. So that is our role. So we store it with the custodian, which is registered with Ministry of Finance. And we also do one more thing. We show you the wallets. So whatever wallet that is held with the custodian, we show you that.
And how do you guys make money?
We do have management fees. We have a management fee structure.
How much is that?
So we have broadly we have two offerings. One is the index offering, which tracks Bloomberg's crypto index. For that, there's a 1.5% annual management fee, and there is just pure Bitcoin play. So we have broadly we have two offerings. One is the index offering, which tracks Bloomberg's crypto index. For that, there's a 1.5% annual management fee. Or if you just want Bitcoin, there's a pure Bitcoin allocation that you can do, which comes at 0.95% annual management fee. Yeah.
So is crypto illegal in India?
I think a lot of people relate unregulated. They misunderstand unregulated as illegal. So rightly so, because most of the products that they invest in would be regulated, right? Like if you're putting money into let's say a gold ETF or a equity mutual fund or a FD, all these are regulated. But crypto doesn't have a regulator. Like you don't have a SEBI or an RBI telling what to do and what not to do. So that is where the problem comes. So then people start to think that this is illegal, right? But if you remember, there was this restriction from RBI which said that banks should not offer services to crypto service providers. But the Supreme Court squashed that circular, saying that it's unconstitutional because you can't deny services to an industry which is not illegal, right? Like for example, real money gaming. RBI can say that real money gaming companies should not be serviced because government of India has said it is an illegal industry. It is banned in India. But as long as there is no law which says that this is prohibited, this is illegal.
But I think government very actively prohibits the user overall not to invest money.
Something to keep in mind. Finance minister has been very vocal about the fact that they have no problem if you use it as an asset. Yeah. So finance minister has been very vocal about the fact that I think a couple of times she has mentioned that you can invest in it as an asset. It is taxed as an asset. In fact, the government of India calls it virtual digital asset. Right, and it comes in your ITR, and there's a separate schedule in your ITR to report.
That is typically considered as when you're investing in a watch, you're investing in a painting or something like that.
That's one way to look at it. So you can't really say discourage. See, something to keep in mind is India is you have so many people here, right? You can't regulate it, or you can't make a statement for the top 1% or top 20%. So if tomorrow someone says, or someone from the government says, see, like, go and buy this, imagine the kind of scams that you will have, right? I remember in 2018, people used to make like a physical version of Bitcoin, like, that would cost you $500, and then you would go and sell it as real. You go and tell people that it is actual Bitcoin, and people would pay $1 lakh for that. That's the reality on one side, right? So when that is happening, the government needs to be very mindful of what they say about this publicly, or how they go about it. So that is something to keep in mind. And coming back, the law completely allows you to buy, hold, invest. Try to use platforms that are, legitimate, has a good track record, run by visible people, because that is a major problem in this space. And also, every transaction is subject to TDS, so it gets
completely
reported,
legal,
and
in a way,
it is so it's like buying a gold bar. If you buy a gold bar, you keep it with you, or you keep it in the locker that you have, right? So you don't have an RBI or a SEBI looking after it. So that's the way to look at it. And it's just because we are all used to, like I said, I understand where the concern is coming from, because you are used to, let's say, you trade equities on a regulated exchange, but you don't trade crypto on a regulated platform, right? So it's, the concern is right, but unregulated doesn't mean illegal. Unregulated only means that all these platforms are not under a guideline. We don't have guidelines, so make sure you choose the right platforms. Right. So that is the only thing to keep in mind. Yeah.
Awesome. Sounds good.
Yeah.